Welcome to another weekly Forex forecast, traders. As always, we will start with the US dollar, the most important market. As you can see, the US dollar has been absolutely tanking, but if you look, we are clearly pulling back into some of these green demand zones from back here. And more importantly, if you look here, these dotted lines, this is a monthly area of demand. You can see it on the chart now, the monthly demand zone that is about to become in control, a liquidity trap right before the demand zone as well. The question now is, will price pull back up to monthly supply from this demand? So looking back at the weekly time frame here, we have a weekly demand that's inside of a monthly demand in control. So that is why we have seen the dollar start to rally pretty much the last couple days. I wouldn't say that we are completely out of the woods just yet. If you look at a 1 hour chart here, to me, it was looking really bullish because we had a very nice upward trend line on the 1 hour time frame, but we created supply. We removed the upward trend line and we have failed to basically break a new high here. So if you look, if I just take my trend line tool and I draw a line across, we have not broken that high. So that is definitely significant. The fact that we push up, failed to break the high, that could just mean we are going to pull back down to this demand zone first and then rally up at 92.21. So this is something to consider. But I will say, if we break this demand zone, not only, is demand being removed, that's obviously a bearish sign, but we'll actually have a downward trend line on the H1 chart as well, which would indicate weakness, which means we could actually continue to pull down towards the 98.16 area. So that's what I am going to be watching. But more importantly, since the monthly demand has come to control, right? So this is a 1 hour chart. Why did the dollar rally up on this 1 hour time frame? Because monthly demand became in control down here. Weekly demand came in control as well. That's why we are rallying out. That's why a 1 hour trend to the upside would really indicate strength and prove to us that that weekly and monthly demand down below is actually continuing to hold. Now, the main bearish thing I will be looking for here is this 4 hour downward trend line. If we can break this 4 hour downward trend line, that is going to be really significant. And more importantly, if we can get a 4 hour upward trend, that's going to be very significant as well. So that's what I will be watching on the dollar this week. More importantly, the 1 hour time frame, that's really going to tell us the biggest story, if this monthly demand is going to hold, or if we're going to maybe push down to the lower weekly demand at 96.87. So for now, I am personally monitoring the 1 hour demand zone and that 1 hour upward trend line to see if we can continue that upward trend line that we had before on the DXY. On to the forecast for the Euro US dollar. As you can see, a couple weeks ago, we did target the liquidity above, and we are reacting off of a previous supply zone on the weekly chart that was fresh from back here. Not really a supply zone I would have been trading at, in my opinion. It's just kind of a random zone. So how do we trade the Euro US dollar at this point? Well, firstly, on the daily chart, we have a beautiful upward trend line on the daily time frame. So as far as a swing trading perspective goes, as long as this upward trend line is holding on this daily time frame, we should be remaining pretty bullish on the euro. Yes, like I said, the monthly demand came in control in the DXY, which could mean the US dollar is going to push up, which means the euro would drop. But so that's what I'm expecting. But if this trend line continues to hold, then obviously that's not going to happen. So we have to monitor this trend line. Even if we break the trend line, we have two demand zones to get passed through as well before we really remain bearish. But at this point, guys, you could be trading long that daily upward trend. I'm going to show you some potential zones here on the 4 hour time frame. And if you guys are enjoying this video, make sure to hit that like button and subscribe. I do these forecasts every single week for free. So make sure you hit that like button. Much appreciated. So we have an area of liquidity down here at about 1.13. It is a good little demand zone, couple demand zones down below at 112 and at 1.09. So I will say, as long as this demand zone holds, we could be looking for longs, and I like a potential long trade down below at the one lower as well. We have an upper trend line here as well, so you could be monitoring that. I'm going to zoom out so you can see the proper trend line to have in your charts. Actually, it is from here to here. So that is the trend line that we are currently in play. We can actually go ahead and delete this one. So that is the current trend line that is in play. As long as that's holding, you could be looking for longs, and I personally like the pullbacks down to these zones. Remember, guys, if you don't feel comfortable with just an entry, stop loss, and take profit, you could always just wait for these zones to be hit, use them as your higher time frame, and look for day trade confirmation in there on a 50-minute chart or even lower if you really, really want. And even on the 1 hour chart here, it's not really super clear what's happening. In my opinion, this is just what I like to call sideways soup. We do not have a trend to the upside. If we break this high, we'll have a trend to the upside. If we break this low, we'll have a trend to the downside. So then we could trade with that lower time frame trend, but we don't have that yet, so we have to wait for that to happen. But honestly, with the daily trend up, we could expect higher prices, but who knows? With that monthly demand and control in the dollar, we could see the euro start to drop. So it's definitely something we're going to have to watch. And whenever you guys watch my forecast on the euro, it is also combined with the DXY. So they're very, very, obviously they're just the opposite, so they are combined together. So make sure you watch that as well. On to the forecast for gold. If you look at a 1 hour time frame first, we're actually going to do a bottom up analysis. Usually I like to do top down. We're going to do bottom up from here. So on a 1 hour chart, you guys know we had very strong price action on gold. Price was pushing to all-time highs. We were creating demand. Demand eventually has been removed, and the upward trend line was removed as well. So that is a very, I don't want to say bearish, super bearish sign, because the trends in the higher time frames are certainly up, but we have certainly seen some bearish price action here. If you think we are going to continue to push down on gold, that is fine. We have two 1 hour supply zones at 33.16 and one a little bit higher at 33.42. Now, I do prefer this one, but both of them are decent. If your risk reward's 2 to 1 or 3 to 1, you could justify taking both. So I like both of these supply zones for potential shorts, and then for longs, we want to see what removes these. And if we have a clear demand zone that removes these supply zones, then we could get a long trade from those zones. So that's what I'll be watching for potential longs, and that would be with the trend. Remember, these 1 hour supply zones are definitely counter trend, guys. I cannot stress that enough. Now, on the 4 hour chart, we clearly broke momentum here, broke demand. This is going to be a significant low that's going to be removed here if we do. And the reason being is because that would create pretty much a 4 hour and a 1 hour downward trend, which would be significant. However, if we do create the downward trend, where are we trending back into? Well, in my opinion, on the daily time frame, we're trending back into not only a daily upward trend, but a very nice rally demand zone on the daily chart. So we could be trending down into this daily demand, and I think it's a great opportunity to look for swing trades in here. Maybe even turn some day trades into swing trades as well, whatever you want. This, I don't really like taking an entire daily zone. It's kind of a big zone, right? However, if you want to get in long at this zone, what you could be doing is looking for confirmation on an H1 time frame. So if we do break that low on the H1 chart, we'll have the downward trend line on the H1 time frame, and then we will be monitoring the trend line to see what demand zone removes it for confirmation. So that's what we will be watching as a team throughout the week. If you want to trade alongside myself and the community, join the Diamond membership for exclusive access to our daily market breakdown videos and catch trades like these. Plus, dive deep with our full-length forecast covering 26 plus markets, our interactive Sunday Zoom sessions, and personal homework to sharpen your strategy. And you'll also join our private Discord group for direct access to me and unlock a complete library of A to Z video lessons to master supply and demand trading. Don't miss out. Let's level up your trading. Links are in the description down below. So this is our nearest term demand zone on the daily chart, but we have a trend line here as well. So even if this demand zone ends up breaking, which can happen, supply and demand is not 100% accuracy. No trading strategy is. As long as this trend line's holding, I think longs are going to be your best friend here. But look, if we do create downward trends, then okay, then we could justify shorting more. But for now, the only zones I'm seeing are the two 1 hour supply zones and the daily demand zone that we could be waiting for to be in control. And look, and even if we break that daily zone, we have a rally-based rally weekly demand here as well at 30.93. So I think it's a great dip buying opportunity down there as well. I'm personally I'm praying we can get a pullback down to some of these zones on gold, as they could definitely prove great dip buying opportunities. Like I said, day trades into swing trades as well could be huge. So right now on gold, to recap, monitor the 1 hour supply zones for shorts. Just remember they're counter trends, so you might want to take profit a little bit earlier. Monitor the low on the 4 hour chart, and then monitor the daily demand if it comes in control. All right, on to the forecast for the USDJPY. If you look at a weekly time frame here, top-down approach, we had a weekly trend. This was removed. So now we are going sideways. So there's not a lot to go off of here as far as the weekly time frame goes. We have a support area in control. This is not demand. I don't care what anybody says. I don't care what video you watch. This is not demand. Yes, there was technically demand down here. I would agree because, buyers took control, obviously. However, this is not a demand zone how we draw them. But right now it is control. We have liquidity down below. I think we could push down, target the liquidity. That's just definitely an option right now, especially since on the daily chart, we actually have a daily downward trend line. So as long as this daily downward trend line is holding, I can definitely justify looking for shorts. Even if you pull up to the daily supply, I think it could be a good area for swing trade shorts as well at 149.09. So we certainly have to monitor this downward trend line on the daily chart. Something significant has happened here on the 4-hour chart. We had a 4-hour downward trend line, was looking really good. I talked about it last week. I think I said we could probably target, this trend line. This trend line was targeted and it has now been removed. That could definitely indicate we could see price move up, maybe target this liquidity on the 4-hour chart and push up to the 4-hour supply that's above at 149.27. So I do think this is a good little base drop supply zone at 149.27. Definitely want to have it on your charts. And even better, we have liquidity above. So I actually hope we react off this resistance and then push up. It would just prove that the liquidity is there even more. And not only did we break the 4-hour downward trend, we actually have a 1-hour trend to the upside. So breaking a 4-hour downward trend is definitely significant, but when we don't have a 1-hour trend to support it, right? If we just have upper momentum on the 1-hour chart rather than an upward trend, the upward trend that we are seeing is definitely giving us strength to the upside. So what I will say as well is as long as this trend line's holding on the 1-hour chart, I think looking for longs on a 5-minute chart is going to be completely fine. And that's what we did here as well, right? So longs would have been fine here. The trend line was removed. We waited. We wait for this high to be removed. And then we can continue to look for longs as long as the trend line's holding. It might feel like you're chasing price, but when you want to trade with the trend, you have to have a trend. And at this point, there was no trend here. Price could have easily reacted off the high and pushed down. That's why we wait for trends. Right now, we have our trend line. So in my opinion, longs on a 5-minute chart, even a 1-minute time frame are going to be good as long as that 1-hour trend line's holding. And then really profit margin is at least up to the 4-hour supply above that we were talking about earlier on the USDJPY. All right, on to the forecast for the GBPUSD. We have a lot of sideways action here. However, I will not deny that momentum is certainly up. We are about to target this high. If we do that, we will have an upward trend on the weekly chart, which obviously would be pretty bullish on the pound. And on the daily chart, we have a beautiful trend to the upside, pretty much picture perfect, in my opinion. I'm going to draw a new demand down below. Not my favorite demand zone. It's not terrible, but it's just so far, right? I'd prefer to see a quicker pullback, but at the end of the day, we have a lot of daily demand here that we could be using for potential long trades. And not only that, we have a upward trend line on the daily chart. So as long as this daily trend line's holding, swing trading longs and longs is definitely going to be good on the pound. However, on the 1-hour chart, we had a little bit of a bump in the road. So we had a 1-hour trend line that was looking good. This 1-hour trend line was removed by this supply zone at 133. So I'm actually going to tighten up just a little bit here. It is a decent supply zone. We have a 1-hour trend line currently as well. So what I will say is if you are looking for longs on a day trading time frame, 5-minute and 1-minute time frame longs are good as long as this trend line's holding up to this 1-hour supply zone. So once this, let's say you get in long, I don't know, right here. As long as it's when the supply comes in control, it might be best to at least put your stop loss to break even, bump your stop loss up to take some profit, maybe take some profit off, because it's a key supply zone I think we could see a move off of. And since the daily trend is up, I'm not saying that this supply zone, is going to hold and we're going to go all the way down and we're going to break a daily trend. Is that possible? Sure. But since we have a daily upward trend, I'm only expecting, maybe a small move off this supply before pushing up. So that is what I think we could see here. It's a key supply zone that we need to see removed to prove to us that the daily trend is going to continue. So the two things we need to monitor here on the pound are this 1-hour supply and this 1-hour upward trend line. If you're bearish, you could be shorting this 1-hour supply zone. I think it could be good for a 1-to-1, 2-to-1 trade. And then this is when if you want to look for confirmation on day trading timeframes, that's where you could do that in there as well. And it kind of increases your risk to reward. So that 1-hour supply, I will be monitoring. The 1-hour trend line, I'll be monitoring to see if we can break that upper trend line and really push up and break the weekly high. So really all going to revolve around the 1-hour time frame there on the GBPUSD. Let me know your thoughts on the pound in the comments down below. All right, on to the forecast for the USDCAD. This thing has absolutely fallen off a cliff the last pretty much since the start of the year. However, we still have a weekly upper trend and upper trend line. So yes, we are pulling back. It doesn't mean we just need to get in long, because obviously longs we would have been getting hammered. Although we did catch a couple longs on the way down, but price is kind of basing out here. We still have profit margin down to this weekly demand at 1.357. So I still think we could see price push down, and you're basically viewing where price is at to this demand as your your long-term profit margin perspective. And with the daily downward trend line here, we could expect prices to continue to go lower. So as long as the downward trend line is holding on the daily chart, I think we could continue to see lower prices. We even have a daily supply above at 1.42 we could see a move off of as well if we do break that trend line. So it's definitely something to consider here on the USDCAD. And on the 4-hour chart, the trend line is pretty clear here as well. So this is going to be more for you day traders out there. As long as the trend line is being respected on the 4-hour chart, you could expect prices to continue to go lower. And we have a very nice little hidden drop, pays, drop, supply zone here. I'm actually just going to tighten up just a little bit. Drop, pays, drop supply at 1.40. So it could be used for a potential short trade as well if we end up breaking the downward trend line. So that is what I'm going to be waiting for here on the USDCAD. Now on the 1-hour chart, we do have a supply zone that is very near price, and I actually really love this zone. Why? Because we pushed up, almost contacted. Well, first of all, let's look at the zone in depth. You can see here, what is this zone? It's a drop, base, drop, supply zone. The basing is decent. The move away is pretty good. Not only that, we pushed up, almost hit it, broke down, and as we almost pushed up again, we've reacted off of this resistance area a couple more times. So this is a very clear liquidity trap setup here at 1.39. I really like it. It's something I'll be watching for here. And this is one of those times as well. This trade is actually with the daily downward trend line. So it means, yeah, you could look for a quick 1-to-1, 2-to-1, that's fine. But you could actually target like the low here as well. That is definitely a possibility as well on the USDCAD. So that's the nearest term trading setup I'm seeing on the USDCAD. And if we break it, that's fine. We have these supply zones above on the 4-hour chart that I was pointing out, and even on the daily time frame. Alrighty, onto the forecast for the AUDUSD. You guys can see the manipulation we have had the last couple weeks here. Massive drop down followed by a massive rally up. Overall, the weekly trend and momentum is to the downside though. However, on the daily chart, we did actually break this daily downward trend line. So definitely a bullish sign. Now we could actually, this could be a bullish sign, right? Like the large players could want to push price all the way up here, but they might do something like this first. So I just want to give you guys the possibility we could see that. But with this daily downward trend line remove, we were actually looking for long trades on the Aussie. So you can see here we had both these zones were removed eventually, but we had this zone. I pointed out this zone. This zone was a loss. We took a losing trade on this zone here, but we also had this zone down here, and this was a winner, 5-to-1. So that's the power of a risk reward trading system right here, guys. So again, I took this trade here, loss, -1%. This trade, winner, up 5%. That's a plus 4% gain by just taking both zones. Everyone asks me, oh, what zone should I take? I like to take both. Not only that, so yeah, this trade was called out in the daily market breakdown video. Both these trades were, so it would have been a loser and a winner, but both the trades worked out. A net positive here on the Aussie US dollar. Beautiful trading setups. And not only that, it was a liquidity trap here as well. This purple box, a huge key in my trading. And this is something we touch on in the supply and demand course PDF. If you want access to this PDF, which is so important, check out the Diamond membership. Links are in the description down below. It comes lifetime access with the Diamond membership. So those are the trades here on the Aussie we took last week. Obviously, it was a hell of a trading week for us. We have a supply zone in control right now on the 1-hour chart. So I'm not going to point out the supply now, but I would have before. If price was down here, I would have pointed out the supply. That's already kind of worked out. Looks like we're going to be testing it again. So at this point, I don't want to be trading that tested area of supply. So we need to wait for this supply to be removed. And if we have a demand zone there, then we could look for potential long trades, just like we did down here. And I'll be doing that in the daily market breakdown videos throughout the week. Now, on the 4-hour chart, we have an options here as well. Don't really have a trend to the upside, so it's a lot of chugging along momentum. We have a 4-hour supply above here, so if that gets removed, we'll be monitoring what demand zone removes that for potential longs. And all the way down here, we have a demand zone. Going to tighten it up a bit, trying to make my zones a little bit smaller lately. We have a demand zone all the way down here, which ultimately is just inside of that daily demand zone that I pointed out earlier. We could be waiting for that to be hit. So looking kind of tricky right now on the Aussie. Obviously, the 1-hour chart is sideways, so we kind of just want to wait for that to be removed. We create some sort of trends to indicate, was this just a fake out above the trend line and we're going to continue down, or is this a start of a new move up? Alrighty, on to the forecast for the USD Swiss. You can see we had this liquidity down here. It was targeted. Now we are rallying back up. Now, on the daily time frame, we have clear momentum to the downside as well. We do have some sort of drop-based drop here. I don't have that as far as my chain analysis goes, but we could kind of hesitate around this area. before either pushing up or pushing down. It's just an area where I think we will pause in this general area there. Obviously, we need to monitor the lower time frames to suggest where price is going. On the 1 hour chart, we had 1 hour trends at the upside, but they keep getting removed. So this trend line was actually removed by this little supply zone here, this little drop-based drop. I've had this supply zone on my charts for, since it was created back, I'm going to guess April 10th. I think that's the one that was. So that supply has been there since. We pretty much reacted off of it. So that is the power of supply and demand. Now we are breaking below the trend line on the 4 hour chart. Why do I think this is going to push back up and break that? Well, because on the 4 hour chart, which obviously a 4 hour trend is stronger than a 1 hour trend, we actually broke the downward trend line here as well, which was definitely significant. And we have a clear base drop supply at 0.83, a beautiful move from this supply. I think we definitely could see a strong move off the supply zone. So it's definitely one I'd want to have on my charts. That's why I think we will continue to push up to that supply zone, where we can then look for shorts here on the USD Swiss. And that is a 4 hour supply zone within a weekly and a daily downward trend. So profit margin really is targeting the low. So lots of profit margin there available on that USD Swiss short on the 4 hour time frame. On to the forecast for the crude oil chart. The last but not least, one of the most important markets, we have a weekly supply above and a weekly downward trend. So honestly, we could see price push up. Long-term bearish on oil, I guess, based on this downward trend. I mean, you can pretty much have to be. I'm going to remain long-term bearish on oil as long as this downward trend line is holding on the weekly chart. If we remove that supply in the downward trend line, then I'm going to be kind of bullish on oil. So we have a supply zone above on the weekly chart. This is kind of the top-down approach, so that's where we could be headed. Now, on the 1 hour time frame here, we have a 1 hour supply with a liquidity trap just right above it at 63.85. So it's definitely an area we could see a move off of to the downside. Ultimately, I think we will end up breaking it though because of the weekly supply that's above. I think we will be pushing up to that, but this could be a quick little in and out trade that we could get a move off of at 63.85. So you definitely want to have that supply on your charts. Now the 4 hour chart is a little bit more clear. We pushed up, created a resistance liquidity area at 66.26. I think this is a great base drop week 4 hour supply on crude oil to look for potential short trades off of. And who knows, we could even push all the way down to this daily demand, which could be a great dip buying opportunity at 57.38 if you are bullish. But remember, this demand zone long is a counter trend trading setup, guys. I cannot stress that enough. Doesn't mean you can't do it. It just means you want to be in and out. But at the end of the day, if some supply zones above with liquidity traps on the 4 hour and the 1 hour chart here in oil, so many supply zones to look for potential quick little short trades here on crude oil. If you want to watch the full length forecast and get my daily chart analysis and daily market breakdown videos, join the Diamond membership. Links are in the description down below.